Amidst the complex tapestry of China's economic landscape, a significant narrative unfolds as the nation grapples with a formidable challenge: the onset of deflation. Consumer prices, a pivotal gauge of economic health, have exhibited their first annual decline in over 2 years, sending ripples of concern through policymakers and analysts alike. Against a backdrop of both domestic and international pressures, this deflationary trend underscores the delicate balance between stimulating consumption, bolstering economic growth, and addressing a range of concurrent issues. This video delves into the intricate details of this economic phenomenon, examining the factors at play, policy responses, and the potential implications for China's intricate economic fabric. China's economy is grappling with deflationary pressures as consumer prices experience their first annual decline in over 2 years in July. This decline is viewed as a significant challenge for policymakers striving to stimulate consumption and economic growth. The Consumer Price Index (CPI) dropped by 0.3% year-on-year during this period, a slightly milder decrease than the anticipated 0.4% fall according to a Reuters poll. This marks the first instance of year-on-year decline since February 2021, with the CPI having remained unchanged in June. In parallel, the Producer Price Index (PPI) also fell for the 10th consecutive month, registering a 4.4% drop year-on-year in July, following a 5.4% decrease in the previous month. These trends reflect the sluggish demand both domestically and internationally, leading to a deceleration in China's economic recovery, which began with vigor in the first quarter. To counter these challenges, authorities have initiated a series of policy measures to bolster the economy, with further actions anticipated. The contraction in consumer prices raises concerns about mounting deflationary pressures amidst weakening economic growth due to ongoing property market struggles and declines in imports and exports. However, government officials have downplayed the deflation concerns. Liu Guocheng, the deputy governor of the central bank, emphasized that China will not face deflationary risks in the latter half of the year. Nevertheless, he acknowledged that the economy requires time to readjust after the pandemic. Despite the recent injection of policy stimulus, both consumers and manufacturers remain cautious, influenced by the sluggish housing market, elevated youth unemployment, and waning interest from foreign companies to invest in China. Investors have been anticipating further stimulus measures following a significant Politburo meeting last month. However, the stock market's response has been lackluster due to the absence of concrete actions. As China grapples with its slide into deflation, this development is likely to intensify calls for increased government stimulus. This situation comes at a time when policymakers are also confronted with challenges posed by a slowdown in the property sector and trade weaknesses. July's data unveiled a substantial 14.5% year-on-year slump in exports, marking the most significant drop since the pandemic's outset. Swar Prasad, a China finance expert at Cornell University, warned of a potential downward spiral in growth and private sector confidence if the country enters a deflationary episode. This deflationary scenario diverges from the Chinese government's target of achieving an average inflation rate of 3% in 2023, highlighting the growing disparity between official expectations and the actual economic conditions on the ground.